basically green. The same for the JSE yesterday, which was up 1% and apparently at its 12-month high, the JSE. So things looking very positive despite the weaker dollar. Is it because of the preliminary indications coming out of the United States earnings season that companies are recovering somewhat?
Morning, Lerato. Short answer, yes. I mean, what we've seen, and it's been very preliminary, but I think what the worries were in the previous earnings season, something like 75% of companies surprised to the upside. But in truth, expectations had been battered so low, it was hard not to surprise to the upside. Now the sense is, okay, expectations are higher. Now what happens? So I think we're going to get less surprising to the upside. We're going to get a lot more coming in as expected. But if we can just continue that trend, it says the grass shoots, which Ben Bernanke mentioned back in early March, really are actually starting to sort of get traction.
All right, we had results from Alcoa, which basically gave us an indication that steel fabrication was, the production was higher, and that could be seeing a construction boom and that kind of thing coming out of the United States, exports picking up. We're also seeing retail sales figures coming out of the States, and some of the major retailers, their earnings up by about 13%. So it suggests that American consumers are spending despite what recent unemployment figures have told us.
Absolutely. The Alcoa number, not a huge surprise in a sense that one of the ways we got through the crisis was with government infrastructure spend. I mean, everyone, ourselves, Australia, China, US and the like, that is going to be steel. So we needed to see it coming through. It came through to be expected. The retail sales, I think, were a surprise. Consumers, 9.8% unemployment, the worst in almost 3 decades. To see them out there spending with there still being a housing crisis in the US in terms of prices indicates that the consumer's starting to get confident, and that's what we need. The consumer's going to drive it going forward. We haven't seen them. Even those who weren't in a bad situation were being very cautious. We've seen them out there shopping. That's important.
Okay, what does this mean for investors? Because we're told that the catalyst for growth is going to come from emerging markets, especially Asia, and that's largely because the weaker dollar now means that many investors are a bit wary about dollar-denominated assets. They'd rather buy into emerging market companies or buy into emerging market currencies, and also in terms of pushing production away from the States to cheaper economies where labor is cheaper, rather. So what does that mean in broader terms for America's recovery? Yes, there are these green shoots, but is it something to be overly optimistic about?
American recovery is going to be very slow and very long. I mean, they're out of recession, they're going to get growth in 2010, but it's going to be less than 1%. That to really get up to a growth, and for America, 2.5% is exciting growth for them because of the size of the economy. That is going to take a long time. And a number of reasons, in part because of the levels of the issues. There's still housing problems, there's still unemployment. Your comments around Asia, around the dollar, these are impacting. So America will grow, it's going to grow slowly. And although there's been a bit of decoupling, they're still a quarter of the global economy. The global economy can't completely take off until America is really up there. So it means the recovery starting, but it's going to only really kick in 2011, 2012.
Okay, let's bring the analysis closer to Africa. We've seen a stronger rand against the dollar and other major currencies. We've also seen a rise in the price of gold. It's touched above $1,050 an ounce now, and many people are saying it's good news in terms of investor sentiment, but it's bad news in terms of the broader recovery process of this economy. The exporters are suffering under the weight of a stronger rand, and also indications when you look at Eskom now applying for more tariff hikes, somewhere in the region of 60%, that inflationary pressures are going to return, and consequently we might see the Reserve Bank having to raise interest rates soon after they've had to lower them.
I touched on the Reserve Bank. I mean, the next move, our view in rates will be up, but we're not looking second half of next year at the earliest, we think, because it's still a fragile economy out there. The rand, currency is almost a voting machine, and the fact that our rand is moving stronger means people are voting for us. They're bringing money into the country to buy our assets. Before they can buy our assets, they've got to buy our currency. That does hurt our exports. Gold at an all-time high of 1,050, as you mentioned, but if you look at the rand gold price, beginning of the year it was about 1,000 rand an ounce, about 10,000, sorry, now it's down to below 8,000. So the gold miners, although gold price at wonderful levels, that strong rand is not helping them at all. And then the Eskom story. Eskom, we know it's coming. We understand it. Every time there's a new report out, we get upset and offended by it, make no mistake. But we know we have cheap electricity. We know we don't want blackouts or load shedding and the like. And the only way that's going to happen with price increases, two sides, one on the consumer, and then renegotiating with likes of Billiton. I think they're going to look at some of their potential Kucher investments to try and get a better match there.
Okay, mentioning Kucher, you're taking us to the Eastern Cape here in South Africa, and that's been a region that's really suffered from poor investment or lags in infrastructure investment. We were now told that the East London Development Zone plans to build an automotive processing zone, as it were, to the tune of an investment of 4 billion rands. That's good news for East London and that local economy. What does it mean for reviving a very distressed automotive and manufacturing sector?
It's going to be very, very tough. You know, in the heyday of motor car sales, I think in 2007 we looked at about 715,000 sales countrywide, and the talk was of ultimately getting to 1 million sales, and a lot of government and industry plans and projections, etc., were planning on that million. We're suddenly down at 350, 370,000 for this year, and people are now hoping we get back to 500,000. Reports out of earlier in the week saying that the vehicle industry is really in a bad place. And it's the project in East London is going to help, but there's a number of other issues, such as, for example, local versus imported components, such as the number of vehicles in the market, just so many brands with so many different sub-brands within them.
But the East London Development Zone is actually targeting the newer Asian automakers coming out of China, India and South Korea. And with that is a pledge from the Department of Trade and Industry to invest about 23 million rands in skills training and support.
Yeah, and what we will see with many of the Asian vehicles, particularly out of China, particularly out of India, is lower priced vehicles, which will help with sales, which will then give it a bedrock, a support to the development, to the skills development. And it goes back to where you started this conversation, which is that particular area, the Eastern Cape, one of the more depressed in South Africa, one of the higher levels of unemployment, desperately needs it. Their only real industry has been motor vehicle. Kucher longer term, but motor vehicles there. If we pump into it, we can save an industry and a region.